Hello students, welcome back. Today we will prepare a profit loss appropriation account and partners capital account as already explained to you in the previous class. Let us take an example and find out how those two accounts are prepared. Look at the question given over here. C and Key are partners sharing profits and losses in the ratio of 2:1. On 1st April 2018, their capitals were 5 lakh and 4 lakh. And as per the deed, partners are entitled to 5% interest on capital per annum. And interest on drawings are charged at the rate of 6% per annum. The drawings of C were rupees 1 lakh and Key were rupees 80,000. C had advanced to the firm rupees 3 lakh as loan. 10% of the divisible profit is to be kept as a reserve. Now we are asked to prepare a profit loss appropriation account and capital accounts of partners. Now it is necessary to understand the question first. The question says, as per the deed, IOC is allowed to partners and IOD is charged on partners' drawings. The rate of drawings is given as 6% per annum. You are not given any time interval, which means interest on drawings will be charged on an average for 6 months. Okay, now below that it is that 10% of the divisible profit is to be kept as reserve. Divisible profit means after subtracting all expenses, whatever is left is known as divisible profit. We'll see the working below, how the calculation is made. Let us look at the working note first. The working note, we have to find out the net profit. The question says, one partner has advanced a loan of rupees 3 lakh to the firm, and the question is silent about what is the rate of interest payable on interest on loan. So it is assumed that interest on loan will be paid at the rate 6% per annum. So the first calculation, net profit is 6,84,600 after subtracting interest on loan of 18,000 as shown in the first calculation. Second part, that IOD, interest on drawings. Both the partners have drawn rupees 1 lakh and 80,000. Rate of interest is 6% per annum. The time period is not mentioned. Therefore, interest on drawings are calculated on an average base for 6 months. That's why for first partner it is rupees 3,000 and for the second partner it is 2,400. Okay. Third, IOC. Partners have introduce capital of 5 lakh and 4 lakhs. Rate of interest is 5%. Therefore, for first partner, interest on capital is 25,000 and second partner 20,000. Reserve is calculated at the rate 10% on divisible profit. Now, divisible profit is coming to 6,45,000 after subtracting interest on loan, interest on capital, and adding interest on drawings. That comes to 6,45,000, and 10% is to be kept as reserve. So 64,500 is the amount of reserve maintained. Now divisible profit, after subtracting all the above, 3,87,000 is a share of profit to C, that is 2/3 of the profit, and Key, he receives 1/3, that comes to 1,93,500. This is the working note. So it is necessary that you prepare the working note first and then prepare the account. Look at the format here. Profit and loss appropriation account for the year ended 31st March 2019. Remember, the nature of profit and loss appropriation account is nominal, and as per the rule of nominal, expenses are debited, incomes are credited. So on the debit side, what you are seeing is the expense for the firm, IOC, okay, and IOD is the income received by the firm. The division of profit is given for C and Key, that is 3,87,000 and 1,93,500. This profit, divisible profit, is distributed in the ratio of 2:1. So working note makes all the things very clear. So always prepare the working note first and draw the format and put all the values according to the calculation that you have prepared. Now the marking is, for the board examination, this question may carry 5 marks and each entry carries half mark. So you should be very careful in solving the question. This is the capital accounts of partners. On the right hand side, there's credit side, you see by balance BD, the capitals of both the partners, 5 lakh and 4 lakh. Second item is by IOC, interest on capital, they are credited to partners. Third item is by profit loss appropriation account. This is the divisible profit what the partners have received as per their profit sharing ratio. On the debit side, you are seeing drawings of 1,80,000. Second item IOD 3,000, 2,400, and after making adjustment, the final figure, that is the closing capital of C and Key, is coming to 8,09,000 and 5,31,100. This is the closing capital which will be taken to the balance sheet when balance sheet is prepared. So this capital is based on the fluctuating method. Here the capital has changed at the end of the year. In the beginning you see the capital is 5 lakh and 4 lakh, and at the end of the year the amount of capital has changed because all adjustments are made to the capital account only when the capitals are fluctuating. If suppose the question says capitals are fixed, let us see how the solution is done for the above question. When the capitals are fixed, it is necessary that two separate accounts got to be prepared for partners. One is the current account and second one is the capital account. Look at the formats given here. The first format is partners capital account. In this, only the capital balances of partners are shown. Opening value as by balance BD, and the same figure is shown at the end of the year as to balance CD. And all other adjustments like IOC, profit loss appropriation account, drawings, interest on drawings, they are all shown separately into a different account called partners current account. So remember that when the capitals are fixed, two separate ledger accounts are prepared for partners. First one will be the capital account, where only the capital amount will be shown. The capital will always remain fixed till the end of the business, and all other adjustments will be shown into another account called partners current account. Now let us come to the next topic, that is interest on drawings. There are different methods of calculating interest on drawings. IOD, that is interest on drawings, is a gain to the firm. Therefore, it is always credited to profit and loss appropriation account. There are two methods of calculating interest on drawings. One is product method and second one is average method. We'll see the product method first. Under product method, the product method is used when the drawings of partners are irregular and the amount drawn by the partners are unequal, not the same. Irregular interval and unequal amount. We'll see how the interest is calculated. There are two different methods of calculating interest under product method. The first one is a simple method. Under simple method, interest is calculated for the partners separately. Okay, IOD is calculated for each amount of drawing separately from the date of withdrawal to the end of the accounting period. The formula that you follow is IOD is equal to amount of drawings into rate upon 100 into month upon 12. Let us take an example and see how the calculation is done as per the simple method. The question says that interest on drawings are charged at the rate 10% per annum and the financial year ends on 31st March 2019. The date of withdrawings are given to you and the amount is also given to you. It is put into a format, and look at the format there. Different columns are prepared. Date column, dates are different, months are different. So irregular time period is given there. Second column is for the amount. Amount also is not equal, they are unequal. Okay, the third column is a number of months. That means from the date of drawing till the end of the year. So 30th April, first month of the financial year, till the end of the financial year, that comes to 11 months. So interest is calculated for 11 months on 1200 rupees. Second one, 1st July, drawing amount is 3000. From 1st July to 31st March is 9 months. Third one is 1st January and the amount drawn is 4000. From January 1st to 31st March is 3 months. And last drawing is made on 31st March, amount is 6000 and number of months 0, because 31st March is the last day of the financial year, so no months remaining there. So interest is also calculated as 0. So here interest is calculated separately for each, and the total amount of interest is coming to 435 rupees. This is based on the simple calculation: drawings multiplied by rate upon 100 multiplied by months upon 12. The B part, that's product method. Little difference is here. Formula is the same. Under product method, interest on drawings are calculated for 1 month. Look at the format given. Same question. Dates are given there. Irregular intervals. Amount is also unequal. Number of months is given to you as 11 months for the first drawing, second 9 months, third 3 months, and the last one 0 month. Now product means you multiply the amount of drawing by the number of months. So 1200 multiplied by 11 is 13,200. Likewise, you keep multiplying the other amount with the months, and total is 52,200. Now under product method, interest is calculated for 1 month on the product, that is 52,200, and the amount of drawings, interest on drawings, is coming to 435 rupees. Next method is average period method. Under average period method, the drawings are made at a regular interval and that also of equal amount. Okay, so let us look at the 3 different period given. First one, when the drawings are made on the first day of every month. The formula applied is total drawings multiplied by rate upon 100 into time upon 12. Here time is very important. Okay, because average period method means time is very important here. So how to find out the time? The formula for calculating time is time left after first drawing plus time left after last drawing upon 2 divided by 2. Okay, so when the drawings are made on the first day of every month, means first drawing was made on April 1st. That means how many months remaining? Till 31st March, 12 months. Last drawing was made on 1st March. How many months remaining? Only 1 month. From 1st March to 31st March, 1 month. So 12 plus 1 divided by 2. So time is 6.5. So this 6.5 is very important when average period method is calculated. Question will be very clear. If time period is given to you, then average period method has to be applied. The second one is when the drawings are made on the middle of every month, formula remains the same, time changes here. Middle means first drawing was made on 15th of April. How many months remaining? 11.5. Last drawing was made on 15th of March. How many days remaining? Or how many months remaining? Half a month or 15 days. So 11.5 plus 0.5 divided by 2, 6. The third one, when the drawings are made on the last day or at the end of every month, means first drawing was made on 30th of April. How many months remaining? 11 months. And last drawing was made on 31st March. How many months remaining? 0 months divided by 2. So 5.5 is the time. So here time is very important. So you have to remember the formula for calculating time. The fourth one, when the drawings are made on the first day of every quarter. Quarter means 3 months. One financial year has 4 quarters of 3 months each. April, May, June, first quarter. July, August, September, second quarter, October, November, December, third quarter, January, February, March, fourth quarter. Okay, the question says when the drawings are made on the first day of every quarter, which means first drawing was made. Here again, time is very important. Formula is the same. T changes, time changes. So how to calculate the time? First drawing was made on the first day of first quarter, that means January 1st. How many months remaining? 12 months. Last drawing was made on the first day of last quarter. Which is the last quarter? January, February, March. So last drawing was made on 1st January. How many months remaining? 3 months. Divide by 2. So your T is 7.5. Similarly, fifth one, when the drawings were made on the middle of every quarter. Middle means after 1.5 months. First quarter is April, May, June. So drawing was made on 15th of May. How many months remaining? 10.5. Last drawing was made on the middle of last quarter. That means February 15th. How many months remaining? 1.5. Divide by 2. The answer is 6. Sixth one, when the drawings are made at the end of every quarter. That means first drawing was made at the end of first quarter. That means June 30th. How many months remaining? 9 months. Last drawing was made on last day of last quarter. Which is the last quarter? January, February, March. So 31st March was the last drawing. How many months remaining? 0 months. So divide by 2. 4.5 is the T. So remember, T is very important. So you should remember the formula for calculating time here. Seventh one, when the drawings are made on the first day of every month, ending 6 months now. Ending 6 months, only 6 months we will take here. Okay, first day of every month, ending 6 months. So again, formula is the same. Drawings will be multiplied by 6. Okay, T will be here. First drawing was made on the first day of every month. How many months remaining? 6. 6 means ending 6 months. So 6 months. Last drawing was made on the first day of the 6th month. So 1 month. Divide by 2. 3.5 is a T. Eighth one, when drawings are made in the middle of every month ending 6 months. Again T changes here. First drawing was made on 15th of first month. How many months remaining? 5.5. Last drawing was made on the 15th of 6th month. So 15 days remaining or 0.5 months remaining. Divide by 2. 3 is the T given. And the last one, ninth one, when the drawings are made at the end of every month ending 6 months. That means first drawing was made on the last day of the first month. How many months remaining? 5 months. And last drawing was made on last day of the 6th month. So number of months remaining is 0. Divide by 2 and the answer is 2.5. In the same way, if the question says drawings are made for ending 9 months, so applying T formula, you will be able to get the correct answer. So in this question, remember to show the formula first, because in the board examination, half mark is awarded for the formula, half mark is for substituting the values, and half mark is for the correct answer. Let us take an example and see how interest on drawings are calculated. ABC are 3 partners. A drew 1000 in the beginning of every month, B drew 2000 in the middle of every month, C drew 3000 at the end of every month. Interest on drawings charged at the rate 10% per annum. You are asked to calculate interest on drawings. Applying the formula, look at the figure. Interest on drawings of A is 12,000 multiplied by 10 upon 100 into 6.5 upon 12. Why 12,000? 1000 multiplied by 12. You have to find out the total drawings. 6.5 is the T, time period given, according to formula what is already told to you. So answer is 650. For B, total drawings are 2000 multiplied by 12, 24,000, and time period is given 6 upon 12. The amount of interest is 1200. And for C, total drawings are 36,000, 3000 multiplied by 12, and time period is 5.5, and the answer is 1650. So remember, learn the formula and apply the formula. You'll be able to get the correct answer always. Okay, so for today we come to end of this session here. We'll continue the remaining part of the chapter in the next video. Till then, goodbye.